Hi guys, in this video I'm going to be talking to you about risk management. I want to show you one of my live trades and how I set my stop losses and my limits so I can manage my risk. Let's get straight into it. Hi guys, it's Any aka the Not Trader, your friendly neighborhood swing trader, back again with another video. Remember to hit that like button, hit that subscribe button, and hit that alert button to get alerts on all my latest videos. I've got Facebook, Twitter, and Instagram at the Not Trader on all social media platforms. And if you check the description section below, you'll see a link to my mailing list. I've also got a training course, 12-part series on the channel, link in the top right hand corner. So if you want to learn all the basics of how to trade in a small 12-part series, it's free for you to watch. Check that link in the top right hand corner and watch those videos. Now in this video I'm going to try and show you a live trade that I've taken and how to manage your risk. So there's always emphasis on how much people are making in a trade, but that's not the most important part, to be honest. You have to start thinking from the perspective of how much am I risking each trade, because that's the best way to become a profitable trader. Not to think of how much could I potentially earn on this trade, but how much am I risking each trade. Once you can think about that first, then you can be able to manage how much you're risking each trade and not blow up your account on one big trade or in a couple of big trades, because you're always thinking about what is there to lose as opposed to what is there to gain each trade, and you won't make silly trades. So without me talking any further, let me get straight into it. So I've taken a long position on DUST, DUST, which is an gold miners ETF. It's a bear ETF. Now let me explain to you why I took that position first of all. So before I get into that, DUST and NUGT are invertedly correlated, and I'll show you why that's important in a second. Let me get NUGT. So this is the one that's invertedly correlated to it. So I can't even say inverted. So if you look at NUGT, let's look at this first. If you look at this on the 1 hour chart, you can see here that it's kind of hit a resistance line 3 times. And this is the third time it's hit it, and I'm under the impression that it might sell off again just a little bit because it's done it the last 2 times at this point. And obviously the MACD, RSI both overbought, so it looks like it could potentially sell off for a little bit, and the 180 simple moving average is above it. Now on the inverted version, I'm on the 5-minute chart, but if you look at the 1 hour chart, you have the same again. Really, you have the same situation where this support line has been hit once, twice. It hasn't quite hit it here, but it has the potential to hit it. Now it could sell off, but it can also retrace back up for a little bit, and that's what I'm banking on. I'm banking on this descending wedge being hit at this support line here. So if you go to the 15-minute chart, this descending wedge has been hit at this support line here, and now I'm banking on the fact that it's going to climb up and potentially hit this resistance line one more time before it hits this major support here. And once it hits this major support, I think it's going to shoot up, because this is kind of like a bullish wedge. So as you can see here, it came in from the bottom, ricocheted, and I believe it's going to come back to here and then climb up, just based off of what it's done before. But we're not here to talk about that. We're here to talk about the trade I took. So I took a long position here, mainly because the last 2 times it hit this support line, it climbed up. So if you look at the first time it did it, it went from here to here. 3 days it went 100 pips. Here in 23 hours it went 75 pips. So I'm expecting it to go about 30 pips maybe in 22 hours. So I've got my limit at here, and that will give me $88 because I put £3 per pip. So I've got my limit here at 88, and I've got my stop loss here at 28. So I set my stop loss here because it's just below the support line here. Let me make the support line a little bit thicker so you can see it more. So this support line here. So the idea behind where I set my stop loss is based off of this support line. So I set my stop loss just below the support line, and I've set my limit where I think is going to hit the resistance line. Now when I talk about risk to reward, what I'm talking about is whatever you're risking needs to be way less than the potential reward. So I'm risking £28 for the potential to make £88. So what that means is that, let's get the calculator out. if you have 88.5 and you divide it by 28.5, so that's a 3.1 to 1 risk to reward ratio. So that means for every £1 I'm risking, I have the potential to make £3, which is good. So the reason behind that is that you need to take trades where the risk to reward is well, the reward is higher than the risk, and it's potentially I would want one that's 2 to 3 times more reward than risk, because if you're taking 1-to-1 risk to reward ratios on every trade, that means that you need to be pretty much making 50% plus of your trades correct for you to be profitable. But if I've got 3-to-1 risk to reward ratio, if I get this right, that means that I could potentially make 2-3 more trades where I'm risking £28 and be wrong and I still break even. So that means you only need to be 30-40% correct in the amount of trades you make to be profitable. So this just helps you, because as a trader, you're not going to be 90. Anyone that claims to be 90%, 100% success rate, they're lying. A good trader that has good risk to reward, risk management, can be 30-40% profitable, and they can make 30-40% of their trades correct and then still be profitable, because the trades that they win have a large amount of profit in comparison to what they're risking each trade. So this is just a physical representation of what I'm talking about, because if I said you could risk £28 for the potential to make £88, most people would take that risk because the reward outweighs the risk. So you just need to always think about taking trades where you're risking a smaller amount than what the potential maximum gains you can get if it hits your limit. So I just thought I'd show you that within this graph, as you could, well, within this chart anyway, and we'll see how this plays out over the next couple of hours, let's say, or even, yeah, let's say the next day or so. We'll see. We'll get back to this.
A few moments later.
Booyah.